So today's fixed income market is a lot of unknowns overhanging it. Our view is it's really finding the balance between where we were before, say during COVID, where interest rates were all near zero, risk premiums were nowhere to be found, and where we were post-COVID, where rates were obviously far too high, restrictive to the economy. Where do we land in between those polar opposites? And really, our forecast is to hit that equilibrium point whereby, as a fixed income investor, I'm going to get really attractive income, and there's going to be opportunities to add additional value through active management. The move into short-term bond funds, GICs, target maturity bond funds, made a lot of sense against the backdrop that we faced over the past couple of years. Short-term yields were extremely high thanks to bank policy rates being hiked, and that attracted a lot of flow investments to points on the overall yield curve that offered the best headline interest rate. We've moved past that point. We've seen a renormalization in the curve. And so what we say to investors is really what worked over the last 12 to 24 months is not what is going to work going forward. So our view is need to move away from the recency bias of staying ultra short term and do a bit of what we define as extend to defend. Right now, what you want to look at is the longer term maturities. Move that money out a little bit more, call it 2, 3, 5-year terms, say in the target maturity bond funds. Still really attractive yields in that part of the market. And the added benefit of you get those yields for longer periods of time and really mitigate that reinvestment risk. We actually have a full spectrum of solutions to meet any client need and really to be tailored to the goals that they're looking to achieve. We think something like the fixed income pools that CIBC offers is a great way to have the total return potential that's available in the asset class. And those pools benefit from really two factors: specialized managers in all the different niche areas of the fixed income market, finding the best risk reward opportunities across the multitude of markets within fixed income. And just as importantly, the oversight that comes with asset allocation. We know at times when stresses hit your overall portfolio, your fixed income solution is going to show up to work and help buffer some of the risks that you may have in your equity and alternative investments.